Hello everyone, welcome back to Academy of Internal Audit. So we are preparing a series called Key Points for CFE Examination. Today we'll be discussing about the module 1, chapter number 2, that is the financial statement fraud. So just to give you an idea, in this chapter we have to discuss about what all are the frauds around the financial statements. We discuss about assets, liabilities, revenues and expenses, how the frauds are actually done through these different modes, right? So we have discussed about the various fraud schemes, why the fraudsters used to commit the financial fraud. We also discussed about how the fraudster actually used to commit these things. Primarily, the main intent of fraudsters are to showcase the company position on the higher side. The company is less worthy, but they used to pretend it to be the more worthy, right? So we discuss about various fraud schemes here, which includes the fictitious revenue, timing differences, improper asset valuation, and so on and so forth, right? And last but not least, we have discussed about the financial statement analysis in this chapter. We have also let all of the fraud examiners to know that how to analyze the financial statement and come up with such kind of fraudulent situations in the financial statements, right? Chaliye, without taking much time, let's proceed with the key point in this chapter. So guys, first of all, the very important point in this chapter is what is the financial statement fraud. So financial statement fraud is the deliberate misrepresentation. So guys, deliberate is the key point you have to keep in mind. Deliberate misrepresentation of the financial condition of the organization. And why they are doing it? To deceive financial statement user. These are the two important points you have to keep in your mind before you go for the exam, right? Number one, financial statement fraud are the deliberate misrepresentations. Number two, these kind of frauds are done to deceive, to make fool of the financial statement users. It can be you, me, or anyone, right? That is the important point. Next important point here is the fictitious revenue. It happens in most of the cases where the fraudsters try to showcase the revenues on the higher side by creating the fictitious sales. Sales is not done, but they are claiming 1,000 customers has came to my place and have purchased 10,000 rupees each. Right? By that way, they used to increase their sales, because the higher the sales, the higher the profit. Higher the profit, higher the company condition and situation. That is called the fictitious revenue, right? Next important point here could be the concealed liabilities. As I discussed in this point, when they used to create the fictitious sales, they used to hide, conceal. They used to hide the liabilities and expenses. So many liabilities they will not be showing in the books of accounts, right? Or so many expenses they will not be showing in the books of accounts to have the higher amount of profit, right? So there can be different methods of concealed liabilities and expenses. Guys, you have to remember, because it is very important from the examination point of view. The first method is the liabilities and expenses omission. They will be just omitting. They will not be recording out the liabilities and expenses. Second is improperly capitalized costs. Certain expenses, cost which should be expensed of, but they are capitalizing it. They are increasing the asset instead of recording it into the cost. Failure to disclose or improper recording of so many type of the cost. So they have not disclosed the so many type of the contingent liabilities, you can say, right? Very important from the examination point of view. Last but not least, again the next important point in this chapter is the related party transaction. Whenever you are doing the transaction with your related party, anyone who is connected to your company, right? Then such kind of transaction should have been disclosed. Examination question: is all of the related party transactions are illegal? Answer should be no. All of the related party transactions are not inherently wrong, but must be fully disclosed. करने में problem नहीं है, कर रहा है तो बताना है कि किया है, right? There is no problem in doing these transactions, but you have to Fully disclose. Example, very, very important from the examination point of view. There are certain accounting changes which you have to disclose. Number one, accounting principles. Number two, estimates. Number three, reporting entities. Guys, I'm just touching upon and letting you know the important points, not explaining the concept in detail. All concepts have been explained in video lectures in the detailed video lectures of CFE curriculum. These are the points which you should refer before you go to the exam. Right? So that is a very, very important point. Moving on to the last point of this chapter is the current ratio and the quick ratio. Very important. There will be one question from the ratio point in the examination, that is going to be the current ratio or quick ratio. What is current ratio? Current ratio is when comparing with the current assets to the current liabilities. What is the quick ratio? When we compare the most liquid asset to the current liabilities. So current liability is the same in both of the ratios. In the current ratio, it is the current assets. In the quick ratio, it is the most liquid assets, or we can say the quick assets, right? So these are the points which you have to recall before you go for the exam for the module 1, chapter number 2, right? So now it's a time for question. You have to let me know. As you know, there are two methods of doing the financial statement analysis. First is vertical analysis, second is the horizontal analysis. So please let me know which figure is considered as the base value while you are doing the vertical analysis. Just answer in the comment section. We'll let you know whether you are right or not, right? Which value is considered as the base value for the vertical analysis? Thank you so much for watching. See you in the next video. Bye-bye.